Some big news that Dow Jones is reporting right now. Johnson & Johnson, it says, plans to split into two public companies. It looks like they're going to be spinning off their consumer division sometime in the next 18 to 24 months, according to executives. They say they still haven't decided exactly how this split is going to work, but J&J is leaning towards a spin-out at this point. Of course, the consumer companies, this is a big business. It's a $15 billion a year division. It sells things like Band-Aids, like Tylenol, like Johnson's baby powder, and you all know about all the lawsuits around Johnson's baby powder. I guess Alex Gorsky was asked by the Journal what if that was part of the reasoning. He said the reason they're making this change is because the customers and the markets have diverged so much in recent years, including during the pandemic. He said the lawsuits with the baby powder aren't part of that. Take a look at the stock right now. It's already up by 3%. Johnson & Johnson, $168. And, guys, this comes after we just heard the news this week about GE splitting itself into three separately traded companies as well. Conglomerates kind of not in favor at this point, and maybe the idea of spinning off some of this could be something. Meg Terrell is standing by, and I want to bring her in on this as well. Meg, again, this is some pretty big news, but it does follow what we've seen some of the other big competitors of Johnson & Johnson in terms of spinning off their consumer businesses as well.
Yeah, absolutely. Pfizer and Merck among companies that have shed that. And there's been a lot of questions for J&J over the years. Does it make sense to keep these brands? Up until now, it always had. I mean, these are the iconic J&J brands: baby powder, baby shampoo, Band-Aids. So it'll be very interesting to see the interest in this business. J&J up there almost 4% on this news. Investors in the healthcare space, like the pure play pharmaceuticals business, the medical devices business, of course, has been going through a recovery from the pandemic, having been hit so hard as people were not being able to go to the hospital to get those procedures. That has been recovering. But this has been a question for J&J for a very long time. And up until now, they always said it didn't make sense. Of course, Alex Gorsky, the CEO of J&J, stepping down, I believe, at the beginning of next year. So they'll have new leadership of the pharmaceuticals and medical devices business, or the whole company until they split it all off. The leadership of the consumer business not yet announced. All the details sound like they're still getting figured out here. But big news for J&J this morning, setting up the stock, guys.
Yeah, and Gorsky will still be the executive chairman when he steps aside from the CEO role, right?
I have to check all the details on that, but I'm sure you're right.
I thought that was the case. I could be wrong on that, too. Scott, what were you saying?
I was going to ask Meg. I mean, it underscores, you've covered this area for a long time, just how much the healthcare business itself has changed and continues to change, and where these companies think that they can find the best growth. Right, Meg?
Yeah, it's been sort of a long process in the pharmaceutical industry of really paring down. We saw it a while ago with Abbott and AbbVie splitting up, really separating out the drug business. That is such a huge business, and one that investors really like to be able to bet on its own. So it has been the in vogue thing to do, to split it off from the rest of a big conglomerate company. But J&J has always bucked that trend. So it's just fascinating to see them say right now is the right time to do this.
Yeah, and J&J, in fact, ended up with a big piece of Pfizer's consumer business several years ago, right? And so I would suggest that, Scott, you talk about why now. J&J, the valuation is pretty much a big discount to the stock market right now. So it's not getting credit for the balance and the diversification the way it used to, arguably. And I think that's behind what GE's up to as well. And a lot of these companies feel as if the market would rather have the pure play. Cost of capital is cheap everywhere. One thing, here's a nerdy question. J&J is a AAA rated company. It's one of only a couple left. We'll see if that remains the case with either of the resulting companies.
And what about the idea that it's a Dow component as well?
Yeah, you'd have to decide which one sticks most likely and which one goes.
Right.